All right, welcome back to Overtime. We told you just before the break, Walmart has cut its guidance, and you can see the stock is reacting quite negatively to that announcement, down more than 6%. Cerity Partners' Jim Lebenthal joining us to discuss NXPI and the earnings. But let's react to this first, Jim. This is what we understand to be primarily due to pricing actions aimed at inventory levels, improving them, i.e. cutting prices because they got too much inventory.
It's as simple as that, Scott. It really should surprise no one. I mean, you know, when they had their last earnings report along with Target, I think both companies expressed some optimism that this inventory issue would be over quickly. I mean, anyone with sort of half a brain would realize that it wasn't going to be over quickly. There was too much over ordering. For the consumer, this is actually good news. For the CPI, this is actually good news. For Walmart shareholders, it's not good news. But frankly, the response is somewhat muted, which reflects the fact that people should have seen this coming.
I mean, part of the issue is that these retailers, whether it's Walmart or Target, they have too much stuff that people don't need. I'm thinking of big screen TVs, which they sold gangbusters of during the pandemic when all of us were at home, and now they're stuck with high inventory levels, and people don't need that. You remember back to Target when they spoke of those fuel costs impacting the price of their trucks and just the cost of getting goods from here to there, not to mention the currency headwinds. So it's a perfect storm, if you will, Jim, of a scenario affecting Walmart, at least at this moment. And who knows what we hear from some of their competitors down the road.
I think you expect to hear the same thing from their competitors down the road. And, you know, you went through a very good list there of what's causing the inventory problem. Also, what's contributing, and you didn't mention this, is certainly there was some over ordering. You know, the worries being that with the supply chain bottlenecks, companies like Walmart and its competitors thought they wouldn't get enough of what they ordered on time, so they over ordered. And guess what? It showed up.
Yeah, Jim, sorry, I was just looking at something here. They've got food inflation problems. Courtney Reagan, our retail guru, is with us now. Court, what can we make of this? What's your first reaction as you go through this and you look at the same headlines that we're trying to make sense of?
Yeah, I have to say, actually, Scott, I'm a little bit surprised that Walmart did this mainly because we don't normally hear from them intra-quarter. So that does, of course, suggest that these changes happen potentially very, very swiftly, even though we all understood what was going on with the pressures of inflation. And I think you make a good point that the mix is really what's important here. So it looks like their comp sales are trending higher than expected, about 6%, but it's because it's a heavier mix of food and consumables, and those are lower margin goods. So the sales of general merchandise, it looks like they're sort of taking down the expectations there for the full year, even though they say that some back to school does look pretty good here, at least in the early going. It's probably not enough to move the needle. They talk about the impact of food inflation. So yes, the profit is being lowered, the lower profit for the full year because of what's going on here in the second quarter, even though it looks like revenues and comps are higher than expected because of what is being sold. So to your point earlier, Scott, sort of the wrong mix of the wrong stuff at the wrong time, and just really tough to turn around these inventory orders for a retailer as large as Walmart that does have all of these different categories that they have to flex at any given time to meet this waxing and waning of supply and demand. Yeah,
I'm also looking at, apparel is of particular concern here, Court. You cover so many different apparel retailers. Can you just give us some context in what you've been following from some of these other companies out there who have and are facing some similar challenges? Not everybody is in the same boat, of course. It depends on what mix of apparel you have, but this is by far not the first company to have these sorts of issues, particularly with apparel, and then you find yourself having to discount so heavily that it cuts into your margins. Absolutely. And I think that's such a good point, Scott, about apparel, because it's not apparel across the board. It's what kind of apparel. Remember, during the pandemic, we were all sort of flexing up our athleisure wardrobes. But now that people are returning to the office, they really want to get back to workwear. I know it sounds crazy, but we talk to a lot of people, whether it's sort of the fashion director at Macy's or Bloomingdale's or Nordstrom, that say suiting is actually
selling pretty strongly. So are dresses. And we actually saw that in that retail sales number. When you look at a company like Gap, Gap Inc. is what I'm talking about. They were really over-indexed sort of in the casual, especially at that Old Navy division that is so important for them. That's sort of their sweet spot anyways, is casual, family, kids, athleisure. And that's just not where people are buying right now. Sort of the pendulum is swinging the other direction. And for a lot of these companies, if you have a multi-category mix, clothing is going to be higher margin. So for a Walmart, for a Target, it does help offset, the lower margin categories like the food. And so that's going to be particularly difficult if you're trying to balance out that mix. We know that Target is already discounting some categories of apparel and some home goods that weren't selling as quickly as they had hoped. And they sort of made that announcement with their inventory, and perhaps some consumers are taking advantage of it. So maybe we'll see, again, an uptick in the revenues, but it's going to hit the margin.